In today's video, I'm going to teach you how to make money in a surprising way. A way that most people who are watching the market wouldn't expect that a trade would work. I'm Steve Spencer, a co-founder and partner at SMB Capital, a proprietary trading firm in New York City where we trade stocks, options, and futures. So one of the first things I did this morning when I was doing my morning prep and identifying what were going to be the best in-play stocks to trade today was share our number one stock on our morning game plan with the Twitterverse. And I tweeted this out. Walmart, solid earnings, new all-time high. Stock seems overextended to upside now. Showed you the chart in the pre-market where it had gone up a few dollars. And I got quite a few responses from this. And whenever I talk about shorting a stock that has good news, there's always a few people who are bewildered, befuddled, confused. And so what I'd like to do is actually walk you through the process that I went through in the pre-market, a process that I do every single day for my stock selection, and kind of show you how I arrived at this conclusion, and then kind of walk you through, from a trading standpoint, how to execute this trade in a safe way, in a good risk-reward manner. The first thing that I do every day is identify stocks with strong catalysts. And so my morning routine, I get generally to the office between 7:30 and 8 o'clock. I sit down, pull up the SMB scanner, and I basically see what has news, what is a strong catalyst, what is moving, what's trading in the pre-market. And so that's the process. After I find the strong catalyst, then I look at how people are positioned in the stock. Meaning, coming the week or 2 weeks coming to earnings, was the stock moving higher, so people are positioned from lower prices, or has the stock come down? People are positioned from higher prices. I zoom out and I look, what has this stock done in the last 12 months? What has it done in the calendar year? And what I'm doing there is I am analyzing the price action on the higher time frame versus the market overall, the S&P 500, and versus the catalyst itself. And by the way, while I'm doing this entire process, I'm then putting together a morning game plan where I'm putting on the stocks that we're going to look at, we're going to discuss in the morning meeting. I'm identifying the key levels where I'm going to have a bias for shorting, getting long, based on their behavior against these levels. That entire process, I go over in detail in our 2-hour free workshop. So if you're interested in 30 minutes of this being explaining exactly what I'm talking about right now, click on the link above. You can go to the workshop later and check that 30 minutes out, or otherwise go to tradingworkshop.com. And so I'm putting together my morning game plan. I've looked at find the strongest catalysts. I'm analyzing how people are positioned coming into the catalyst. I'm looking at multiple time frames. How are people positioned on the higher time frame, and how is the stock done relative to the market? Because what I want to do is measure the performance of the stock versus the catalyst and versus the market. So in the case of Walmart, what I put in the morning game plan notes here, it's the first stock we talked about. What I put in 7% earnings per share beat, that's solid. That's why I put that in there. E-commerce revenue growth strong year over year. That's important. But then the third thing I put, this was the kicker. This is why I had tweeted at 7:40 this morning, overextended despite the good news. Stock is up 35% this year. The S&P 500, I don't actually know off the top of my head how much it's up. It's probably up like 22%, 23%, somewhere in the low 20s. But I know that this stock is up 35%. So if market is up X and Walmart is up 1.5X, and the growth, it's not doing gangbusters growth and raising guidance and all those things, there's some room for it to come down. Now, is it going to come down with its performance in line with the market overall? No, because it's actually performing better in terms of its earnings per share growth than the market overall. So it deserves to be outperforming the market, but there's a gap there. And so that's kind of from the bigger picture perspective. Then I've got the levels in the game plan. I've got 125 in pre-market. I know 121 is the prior all-time high. and I know that 122 is 2 ATRs below where it's trading in the pre-market. We'll get to that in a second. And it's also where it was right before the news was announced. The reason I think in terms of ATRs is when something reports earnings, intraday range will sometimes be 2 ATRs. On the lower price stocks, sometimes they'll move 3 or 4 ATRs, but generally speaking, if something gaps up, the intraday range will then from there be 1 to 2 ATRs. And so if it's at 125 in the pre-market and it's going to sell off, 122 is a natural level. The ATR is $1.50, it's $3 below. That's a good spot to look at. The other thing that you have to think about is I'm putting this game plan together around 8 o'clock. Between 8 o'clock and 9 o'clock when I'm doing the morning meeting, the stock might actually have already come off to 123.5, 124, and that'll put it closer to our first support there, and it'll be easier for it to spike down right there on the open. And so what I'd like to do now is actually take you through some of the charts and kind of work our way down from the highest time frame to the lowest time frame. So I'd already mentioned earlier that the stock was up this year around 35%. What you can see is going all the way back on a 12-month basis back to last November, it sold off pretty hard from 100 down to below 90. That was during the big December sell-off. It had bounced back up above 90 by the beginning of the year, similar to what the SPYs did when it bounced. And then since then, it's been in a very nice uptrend. And you can see it's extended above, well above the uptrend at this point. And that's another factor in terms of if it got sold, could it come back to the uptrend itself? The other thing that I'm thinking is it's consolidated pretty nicely above 115, the prior high from over the summer. You can see it broke through there, I guess, in September, and then it tested it a couple of times, and it's had a pretty nice consolidation. So if it fails on this large gap up this morning to 125, I'm looking for it to come into the prior top of the consolidation. But in the coming days, if large firms decide that the growth wasn't so great going forward, perhaps it'll move its way back down to the bottom of the consolidation and then set itself up for more upside in the future. And again, I'm thinking about these higher time frame things because I may be putting on an options position, I may be putting on a swing position. I'm not just thinking about how to trade it intraday, although we're going to drill down and look at that as well. So here's the medium-term view coming into earnings. We're looking at a 30-minute chart. You can see the blue line in the middle there. I had the prior high highlighted, 115. It failed there in July. It came back up there in August and failed. And then in September, it finally broke through that 115 level, and buyers were very much in control. Came back and tested it a couple times mid-September, beginning of October. Remember the weakness beginning of October? That was a chance for people who hadn't been able to get in on the move to 115 to 120. It's on your list. You bought it on that pullback to 115. Now coming into earnings, it was just very strong. It had been testing 120 a few times. And in fact, the day prior to earnings, it actually broken through and closed above, made a new all-time high. And then in the pre-market this morning, before the news was announced, it actually drifted into 122. So here's a chart, the intraday view, starting with the pre-market and the open. What you can see is the news comes out, headlines are good, pops to 125 immediately. I tweeted out, looks overextended to me. Then over the next hour, it pulled in actually a couple of dollars. And so I wasn't certain that I would actually get a chance that my offers up at 124.80, 24.90 would get taken. But the idea is, after I see this weakness, that says to me, other people, market participants, when they come in after 8 a.m., they had a similar market view to mine, which is the stock has come up quite a bit already. Last quarter, I forgot to actually mention this, on the medium-term view, we can actually see the gap up in the middle of August. You can see that big green bar where it had that big move from like 108 to 112. That was the last quarter's earnings. So we know quarter over quarter, it's now gone from 108 to 125. That's over a 15% move quarter over quarter, which is a huge move for Walmart. This is not a momentum stock. This isn't Roku. This is a large cap, strong uptrending stock with good fundamentals, but it should not, 15% quarter over quarter is a very big move for it. So getting back to the intraday view here on the chart. So it's popped to 25, Before the open, it's pulled back to about 22.60 or something like that. The morning meeting starts, and as I'm doing the morning meeting, it's worked its way back up to 124, 124 and a half. My price alerts are going off. My offers actually get taken into 125, and I'm short the stock. So that's the most aggressive way you're going to play it, getting short in the pre-market before the market opens, and you've had a chance to see when it settles down and who takes control. So I'm pretty confident in the idea. I'm not, I don't think it's a 70% or 80% chance it's going to 120 today, but I think it's better than 50-50. It's going to fail at 125. I'm constantly putting percentages of chances of particular price patterns. I did that in a video about a year ago, but I did that where we talked about every time something has a catalyst and gaps lower or higher, I assign percentage chances to where it could go. It was probably 120. I was thinking maybe it had a 30% chance, but I was certainly thinking it could fail better than 50-50. It was going to fail at 125 and test the 122 level, our first support. And so that's why I was focused on the short side. Now let's drill down on this a little bit. Here's a more drilled down chart from when the market opens. And what we can see is right on the market open, it spikes above 125. I think that was right at the open, and then it spikes down. And after about 5 minutes or so, the weakness where it comes down to 123, what I want to see is the next spike for it to fail basically below 124. And as we're moving out in time over the next 15-20 minutes, the best case scenario is it spikes up, it comes down, it spikes up again, makes another lower high. So I've highlighted this chart for you. Point number 2 basically is after those 2 bars that I've circled, which shows sellers come in right at the open with some pretty good volume, is I'm looking for a lower high. And that's number 2 that I've highlighted for you right there. Sellers have now come down below 124. And then after that, it comes down to the morning low and starts moving sideways. Ideally, when you're shorting a stock and it spikes up on the open and then has a down move, you want to see a lower high, and then you want to see some sideways action and then a break and a new low. And so that number 3 that I've circled there for you is a consolidation right below the low. It breaks to the downside. And number 4, what I've highlighted for you is I do not want to see it reclaim that consolidation area or move higher. That would be a breaking of the downtrend, and perhaps the large institutions don't have their algorithms on to sell to TWAP out of the stock all day. But in this case, that's not what happens. It just makes a new low and then finally comes into our first support at 122. And it takes it a while. It takes it over an hour from the open. And so at that point, I was like, oh, it's 122. Buyers came in, it stepped up. And it looks like, okay, well, maybe that could be it. But what happens about 20 minutes later is it takes out our first support level. But once it got below 122, basically people capitulated. It took out the morning high, and then people just, I think anyone who was buying in the open who thought that it was going to close at the high today, they capitulated. It went down to below 120 a share before it finally had a little bit of a pop back up to 121. And so overall, big picture, was pretty much what I thought was not best case scenario, but pretty close. Best case scenario would have been right on the open. They flushed it to our second support, never even got above 122, and then trended down into the teens for the rest of the day. But I thought this was pretty close to best case scenario. So to recap for you, this was our number 1 trading idea today. It had a strong catalyst. It was gapping significantly higher. It was actually gapping multiple ATRs higher, and the thought process was on when we zoomed out on the much higher time frame that larger market participants, people at hedge funds who have large positions would be saying, okay, up 15% quarter over quarter, up 35% this year. It's at 125. What do we think? What was our upside target on this? Oh, 130, 135. We're almost there. It's probably a good idea to take off some profits at this point. And by the way, we might see that tomorrow again as well. So we'll keep our eye on that for tomorrow as well. It closed near the low, second day play, right? Second day play, we teach that in the 2-hour workshop, tradingworkshop.com. Half an hour on stock selection, 15 minutes on how to execute the second day play. Walmart is a perfect example of what is setting up as a second day play after a catalyst, closing in the bottom 25% of the range. Go to the workshop, I'll explain exactly how to trade it. If you go to the workshop at 8 o'clock tonight before tomorrow, you'll know exactly how to make this trade tomorrow. Seeing how people are positioned, and then identifying the key levels, and then trading based off of the price action. For less experienced traders, you got to learn these steps, but understand at the beginning, your first few years, you're not going to be able to understand the bigger picture with the catalyst as well, but you want to recognize it and put it on your list. and then pay very close attention to the price action and the levels, because those other things are going to come with time. I hope you learned something here. I'll see you next time.